Well, all that glitters is gold. The yellow metal rally has been unstoppable as tariff tensions spurred safe haven buying. Hello and welcome to another edition of Commodity Champions. I'm Manisha Gupta, and the gold has hit record highs for 20 days in 2025 in various countries including US, India, China, Japan, Australia and some more. Falling yields and a weakening US dollar has aided the yellow metals rally. It has gained over 18% between January and March this year, making it the best quarterly gain for the metal since 1986. Joining me now to discuss this further are Sachin, Jain, MD World Gold Council, and Ananth Padmanabhan, MD NSE Jewelers. Dileep Narayanan from Malabar Gold as well joins in to weigh in his thoughts there. Thank you, gentlemen, so much for making time for this. Sachin, to you first. And it has been a one-way rally and quite interesting at that. Tariffs on one side, China insurance companies buying is the second thing, the geopolitical tensions the third, and then the investment buying globally has been quite on the stronger side as well. Now, from where we stand, how does 2025, the rest of the year, look to you?
So, Manisha, thanks so much for getting me on. And in a very short span of 30 seconds, you've given all the points that I was thinking I would give. So just dwelling a little more, you mentioned about the 20 gold peaks, all-time peaks that we've already witnessed in the year 2025. This has already given us a 19% up. That's huge and one of the best asset class performances. Now, you talked about the tariff issues, which of course should get little more clearer in the coming weeks. But also what you softly touched upon is the pension fund opening of buying, particularly in China. And that, I believe, is going to be quite a significant change, which is not temporary, but quite a significant long-term sort of trend that we'll witness. We also opened similar conversations in other markets, including India. Let's see how long it takes. But just to give you a sense that even if that market opens up to 1% of their AUM to be invested in gold, that is humongous. That's over like 600 to 700 tons of gold that they might sort of get into buying. So that's quite permanent. But you're spot on. The rally is strong, and all the elements around geopolitics, the conversations that we've been hearing from the US, not just on tariffs, but also on Iran, also on Russia, have been all sparking off the geopolitics even further, and are all strong pillars of why we see what we're seeing in gold today.
Sachin, a lot of people have been putting out those numbers of $3,000 an ounce, and then people revised it higher to 3,100 and then 3,200 for the rest of this year. But we've seen most of that getting achieved in the first quarter of 2025, if not the second quarter. And April is when markets believe that you could perhaps see the gold prices peaking if things change for any better. Any idea? There has been a report from Goldman Sachs suggesting that if it gets extreme in those circumstances, 4,000 and 4,500, I mean, you throw something and you'll find a number there, is what we really seem to be getting from the markets right now. We are into uncharted territories. We don't know a lot of things right now. But with the way the gold seems to be garnering a lot of safe haven money, smart money, new money as well, what's your sense?
Well, I think you mentioned about Goldman Sachs prediction. And the other thing they've also predicted is they've now proposing 35% probability of a US recession coming in. So a lot of these, as you said, numbers are out in the air. But I think if you look at the fundamentals and the basic articulation of gold around being a safe haven, around being liquid, around being a great diversifier, I only believe that through your channel, to your audience, I would only want to say that look at gold from a long-term perspective and not week, month as well. And the fact is that all these elements around the pillars of why gold is where it is today, they all seem to be in the favor of gold in the short term to medium term.
Dileep, Sachin would keep it away when it comes to talking about gold prices so much, but I do want to talk that with you. What is your sense? I mean, what is your back of the envelope sane calculation on where gold is going?
Well, thanks, Manisha, for inviting me to the discussion. And such as Sachin mentioned, the gold is a rally which is going up, like as you rightly mentioned, for the last one of the best quarters which we would have ever seen in terms of return. Well, as a retailer, we've never seen this kind of a rally for a long period. Of course, the gold has been bullish, but this phenomenal jump for the last 3 months, or rather the last 2-3 weeks has been too high. At the moment it reached 3,000, from there the rally's on. I think that it wouldn't stop here, and it would definitely take up to next level of 3,400, and from there, the new level would be around 3,400 to 800 levels. And on a long term, with all the experts and with all the analysts speaking, and with all the tensions prevailing in the Western market, it looks like the gold is going to be bullish, and it's not going to come down any soon for whatsoever it may be.
Dileep, for a retail house in Indian markets with the gold prices going where they are and a market which is slightly price sensitive as well, how has your experience been in last 3 weeks or 3 months?
Well, to be very open, there is buying happening in the dips. There is as you see the gold price going up, the people who have been sitting in the fence waiting for the price to come down have started slowly moving towards store to buy jewelry, which is the pending buyings. And then, as you know, that the festive seasons are on, and in India there is no stop during the festive seasons of buying gold for not buying gold. So yes, Akshay Tritiya is we're waiting for the Akshay Tritiya, and then from there a couple of other. There was a good Gudi Padwa which was over last 2 days before. We saw a good rush in stores during, and that was at that period of the time also the gold price was on the high. So yes, as far as India is concerned, the retail the thirst for gold will still be on. Maybe on various dips, the purchase, the buying power would be, the pattern would be more. But yes, definitely there is going to be demand for gold.
Dileep, would also want to get an understanding on how are you looking at it as a bullion to begin with? I mean, keeping inventory, hedging it, the metal loans or the lease rates have been on the higher side and very wild numbers coming in from there too.
Well, the hedging policy has definitely gone haywire a little bit because of the lease. The cost of doing business, the interest rates because of the lease rates going up, it did affect. But as a pure hedge mechanism, any retailer would want to not take any risk, and that's what we also follow. We have a policy in place through which we follow, and any retailer would want not to have a what do you call, would not want to take a risk on gold price, right? They would not want to speculate, and that's what globally any retailer would want to do. So lease is one of the best options, but if in case that you feel that it's on a costly side, of course there is exchange. You can always hedge on various exchanges. Now that you have your local exchange, and also now for a certain extent the IFSC is also open. So yeah, there is a lot of new mechanisms opening for a retail company like us to hedge us.
Anantha, getting you in the conversation as well, what is your sense with the gold prices? Dileep has just given us a sense that prices can go to 3,400, 3,800 as well on the higher side. Are you making any sense of these current numbers, and would you have a forecast as well?
Yes, very good evening to all of you, and a great financial year to all your viewers. See, gold prices have been going, it's unstoppable. So looking at 3,400 and 3,800, I don't think that it's going to happen in the near future, because there has to be a correction, and the correction has not happened for a very long time. So there has to be a huge correction. If you see the past 30 years, 40 years of how gold has behaved when there is such a big jump, naturally the prices have corrected by 25%, 30%, and once it has corrected even 56%. So when the horse is running fast, people will say faster, faster, but it cannot go on and on and on, because a bubble would be created. So my anticipation is there will be a correction in the coming days. But unfortunately, our US president, every day there is a statement, and markets are reacting to it. Yesterday, he spoke about Iran, and he's also talking about the third term for himself. So all this is not that good for the markets, but prices will fluctuate, and it will correct sometime. Even before it reaches 3,400, 3,800, I'm sure it has to come to 2,700. Then only it can take off, because these tariffs, one day it has to come to an end. How long it will go on? Now on April 2nd, we'll know what is going to happen. So with all this in mind, they are trying to pull it as much as it can, so that whatever the fall is, it will not fall bigger. See, when it was 2,900, if there's a correction, it would have come to 2,700. But now, unfortunately, 3,150. So even if there is a correction of 5-6%, then again it will be below 3,000. But this year and the coming years, it's going to be on the positive side. And whenever there is a dip, I would suggest my customers to buy. Consumers have to come forward and buy at the corrections. They cannot wait for the prices to have a very big correction. But going 3,400 and 3,000, I mean 3,800 and all is too early to say about it. Yeah, because I've been watching last 20, 30 years. So I can see that.
Oh, well, yes, but we haven't seen a kind of situation that we are into right now, where you have tariffs, where you have dollar. There is a concern about recession and a stagflation as well. So, Sachin, what is your sense? A correction is something that the markets has been waiting for, but they've been waiting it for since it was 2,900 and 3,000 and 3,100. We haven't seen that yet.
No, sure. I mean, and on that point, Manisha, the 2,000, 2,500 rally, and I'm sure we talked about it in your platform before, took 1,720 days. The 2,500 to 3,000, which is another $500, it took just about 217 days. So it's been incredibly fast. It's and the market is just playing a catch up. We do a lot of surveys from the consumer lens, and particularly in the lens of what Dileep was talking about, that Akshaya Tritiya is around the corner. We just finished Gudi Padwa, we saw Eid, and we and the entire team have been out on the floor. And I can tell you the buoyancy and the confidence on the retail consumer to buy jewelry is super, super high. Yesterday in the floors, we saw very good footfalls. I mean, I went to stores in Andheri. We were also covering the Delhi market and the Calcutta market. Lots of footfall, decent conversions, but which only reflect the confidence that the consumer has. Now, will this go up? I mean, who knows? And I quite am aligned to what Ananth sir mentioned, that when the horse is running too fast, it needs to calm down. But again, my view would be long term. All the pillars around gold are in favor in the mid to long term.
Well, yes, when you look at long term for 2026 and 2027, most banks also believe that the gold prices will be higher than where we stand right now. But the current momentum on where that can take gold prices, what kind of correction do we see? The next couple of years, longer term is still positive, but the near term is what is really keeping a lot of us quite jittery. But gentlemen, stay on with us. We'll go for a very short break. When we come back, we'll see a more forward-looking statement in sense of how 2025 looks like and where is the money coming in from, and further in case of gold.